Good morning, traders. It's another Friday, July 26th, 2019. I'm Jonathan Van Kloot, and I'm about to jump into the market charts, take a look at them, but all I ask in return is give me a thumbs up on the video. Go ahead and click it right now. Don't worry, I'll wait. No, I won't. Give me a click on the thumbs up, throw any comments or suggestions or feedback or anything in the chat below so I know how I can possibly help you, if I can, in my analyses here. And subscribe to the channel just so you know what's going on in the future. All right, let's jump in and look at the S&P 500. And, well, not to say I told you so, but I told you so. And we headed higher. And sure enough, we actually broke the all-time high, which, you know, is it a little crazy? Yeah, okay, maybe. It sure seems that way. It's easy to think, you know, market can't go higher, but this is why we always have to remind ourselves what we think just plain does not matter. The market is going to do what it wants. End of story. And you have to just go with it. So that is that. And there have been a lot of people, talking about it going short right here and long right here. And unfortunately, getting that dead wrong. So you have to go with what the charts are showing you. And right now we have very clear from all the way down here, higher high, higher low, higher high, higher low, higher high, higher low, higher high, believe it or not, higher low, higher high. And now, of course, here is the previous higher low that this market should stay above if this this uptrend rather remains healthy. So that is one of the key things we are looking for, is to just make sure that the trend remains in force, remains in effect. This is why they say the trend is your friend. Can't talk this morning. The trend is your friend until it ends. Or another version of it that's my personal favorite: the trend is your friend until it bends. So far, the trend has not bent. Well, it bent, but it didn't break. It bent right here, got really close, but then nope, goodbye, headed to the upside again. So right now, everything is intact. We're still heading up. It's all good. It's just as simple as that. And at the moment, my short-term analysis anyway, if I zoom back a little bit, is that we had the end of the wave one, which is right there. And then we had the wave two pullback. And then we have basically the wave three. And right now it's shaping up to appear to be a wave one, a wave two. And then inside that, we have a new wave three, and we have a 3-1, a 3-2, and now we're in a 3-3, and so forth. That suggests that there is considerable potential upside to come. But like I said, it suggests, because nothing is 100% until it's in the rear view mirror and it's in the past. So we always have to adjust our analysis to adapt to whatever the market is doing, because the buyers and sellers, they are the ones that are going to move the market, that are going to push the markets around. And it's the big buyers and sellers, the institutions, the banks. It is not the little retail traders. There's no way that retail individual traders have enough power, enough buying power in the markets to push them around. So the big boys and girls are the ones that are really moving these markets, and you want to just shadow what they're doing. That's the whole idea here. So anyway, very definitely still in an uptrend and hanging in there. But yes, it's definitely getting a little precarious. No question about it. When we're up at these all-time highs, we don't have the advantage of knowing where there's sell zones overhead. We just don't have that. So the best we can do is each time the market moves higher and pulls back, that becomes a sell zone. And you can see what happened next time it got up there. Boom, whacked it right back down again. And so the sell zone right now is still in force. But so far, this trend line is holding. And next time we get up there, we'll have to see what happens. Do we get whacked back down again? Or is third time the charm and it's able to break and go higher? So watch for that. It is kind of a dangerous area to be getting long this market. So just be aware of that. Be prepared for it to potentially finish and turn around kind of anytime, as we are definitely up at sort of nosebleed heights. All right, quick look at the Russell, and really same thing. Huge move up here, huge move down here. The big difference here with the Russell is that we are not at all-time highs. All-time highs are actually way back here, up around 1750 and beyond. So The Russell has got a long ways to go before it is approaching all-time high territory. There's a lot of room. So right now, anyway, we've got the sell zone right up here. That is what we're looking at, sort of that 1600, maybe to 1625-ish range in the Russell. That is the big major sell zone. If this market can get over that, then we've got kind of a clear shot all the way at the all-time highs. So can it do it? I don't know. We'll have to wait and see. So far, so good. I mean, price did explode up and come right back down again, but look where it came down to. It came right to that trend line. I mean, exactly right to it. So it's hanging in there. All signs are still at the moment looking up. Now, the momentum has been bleeding out of this market. It's been getting lower and lower, and it's been heading kind of dangerously close to that zero line. And if it crosses below that on a daily basis, it's going to be similar to what we see here on the 60-minute, which is follow through to the downside. And this is the thing about all these indicators, is that they are lagging. So this indicator did not cross the zero line until right around here. So it would have missed this entire move. If you were trading waiting for that crossover, you missed it. Now, on the other hand, if you understood how to read the price action and you knew where the sell zone was and so forth, you would have been prepared for a possible breakdown. If it got below that low, you would know, okay, we're heading to the downside. Let me just go ahead and jump in, and you could catch this sooner. So it's just all about really understanding price action more than anything. Do not fall into the trap of just trading indicators. That is a deadly trap for most traders, and it is going to end up hurting you. So indicators have their place. Don't get me wrong. I use them. Clearly, they're here on my charts, but they are a very small percentage of my overall trading decisions, and they should be a small percentage of everyone's trading decisions. So anyway, right now, trend is up. Higher highs, higher lows. It's just that simple, and we have to just go with that. So look to trade to the upside, even if you're a day trader, even if you're a scalper. Don't get suckered into trying to trade counter trend. I still sometimes fall victim to this, and it does not usually end well. So just, take it from me, learn from my mistakes. Do not go counter trend. Just don't even do it. Even if you're just in and out in a few minutes or whatever, still, why would you not want to have the wind at your back? So trade to the upside. That's all. Okay, crude oil. Crude hanging in there. It did have this nice pullback to what I believe is complete the wave 4. At least at this time scale, that's kind of what it looks like. It did come right down to that 61.8% level, that golden ratio, perfect pullback. But here's the thing. If I zoom out, I talked about this the other day. If I zoom out to a larger time scale and I consider, I consider this here, this move down here. There's one big thing I don't like about that, and that is this move, by the way, just in case that wasn't clear. That's this move here. And the thing is that if this were the complete retracement, what we would expect to see is a very clear kind of A, B, C. And we don't so much have that as we have a 1, 2, 3, 4, 5, something like that. So this concerns me. This is actually making me think we may actually just be in an A, a B, and there's going to be a C yet to come, maybe somewhere down around 53-ish, 53, 54, something like that. So I'm a little concerned. Also, look at the trend line here. Look what happened. We broke below the trend line. And for a while, it was buy the dip, buy the dip, buy the dip, buy the dip. You can see what was happening. The buyers, every single time it broke down below this trend line, buy, buy, buy. In fact, they were buying this whole move down because you can see that the wicks here are telling you that's buyers, buyers, buyers. The buyers were buying, although also the sellers were aggressively selling. So really, we had quite the battle going on during this whole pullback. The sellers were seeing that they were going to have additional momentum to the downside. The buyers were saying, no, we can buy this dip. And who was right? Well, at the moment anyway, it was looking like the buyers were right, but they're not giving up. I mean, look, every single one of these candles has got wicks, wicks, wicks on both sides. We don't just have these strong pushes in one direction. So I am a little concerned that we broke the trend line and now we're holding below it. We've gone up to test it as resistance now. And at the moment, it's holding. So if we take out this low down here at that 61.8, then that is the confirmation for sure that this is A, B, C, and we are going to have one more thrust to the downside. And so keep your eyes open for that. Trade very carefully if you are trading to the long side here. Momentum has shifted to the downside. So things are a little delicate right now in the short term. So just trade cautiously and trade with that in mind. And if you really want to be safe, wait until this market actually establishes that it is for sure done and either breaks this high and shows you signs of heading higher, or breaks the low and shows you signs of getting lower. Right now, you're just stuck in the middle and we don't know what it's going to do. All right, gold. Gold is just kind of stuck. It's kind of got this rising pattern here, and then there was kind of a horizontal resistance there. And right now, every time gold has gotten up to about that 1440 level, it's just whacked it back down again. Whoops, sloppy. And gold has just not been able to hold those highs. You can see the sellers coming in there and just knocking gold back down again when it tried to hop up. So there is a lot of selling pressure up here. My question is, if we can get back up there again, is there any left? Because they may have already been shaken out. We'll have to see. So far, we do have rising support here, but we have weakening oscillator momentum. So I'm a little concerned that if this wave count is correct here, we may have finished the wave 3, finished the wave 4, and now we have actually finished the wave 5. We have kind of a truncated wave 5 here. So it's a little treacherous to be going long gold right this moment. I do believe that gold has got some significant upside ahead of it. I do believe bigger picture, we are in an uptrend, but I think that we may be seeing a pullback here in the near future, and that could pull back to somewhere around maybe the 1360 level, maybe even all the way down into this area here, this like 1320-ish range. But I do feel that a short-term correction is due, and we may get that at any time. Of course, if this market breaks this high and just holds it and actually is able to head higher and not get knocked back down again, then that changes everything, and this wave 5 is in fact not complete, and we are going to just see our upside now. So we don't know yet right now. We have a big question mark here as to what is going on. So we just need to be patient, let it unfold, give us more information, and then we can start making some trading decisions. On the short term right now, the bear is in control. Momentum is to the bear side below the zero line. But look at that. It's trending up, 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 and getting very close to breaking that zero line. So if it can break to the zero line to the upside, like it did, say, back here, of course, momentum is technically above the zero line, well above, in fact, on the daily. So a turnaround on the 60 and heading to the upside could be all this market needed to turn itself around, get that MACD over the signal line, and the momentum here start to head higher as well. So just watch all of that. But as always, your price action, that's going to be your first and best indicator. Heading down. So this is just solidifying my view that at least at the moment, based on what I see here, I think this was the completion of a wave 1 up, and now we have a wave 2 down. Should get very close to this 100% as long as it doesn't break it. It needs to not get below that 100% level. And then from there, we can head higher. If that's correct, we can head higher for a wave 3. I think this is actually ever so slightly in the wrong. Oops, not that one. This is ever so slightly in the wrong spot. It's actually supposed to be right around there. So anyway, there's the level. If that 100% is broken, then I got to zoom out and rethink this whole thing because this no longer works. And we got to look at this from a bearish continuation standpoint and bigger picture. We are still in this downtrend, and it is not done. So watch for that. We do have what looks like it's going to be shaping up as a very nice divergence happening. If price gets, say, all the way down to the 100% level down here and back down to the start of this wave, with the oscillator momentum significantly higher than it was back there, then we've got a major divergence here. We'll have the oscillator making higher highs and higher lows, and price not doing that, price double bottoming. So that would be very significant. So it is looking like we are setting up for a big bullish move. We just don't have it quite yet. So watch for that. This is not time to jump in yet unless maybe your risk parameters support that. If you can support going long at this level and having a stop, maybe down here somewhere, then by all means, go for it if that fits you. But for me, I would be wanting to wait until this market gives us some kind of indication that it is done falling and is actually ready to head to the upside near this critical level. All right, let's finish up with Bitcoin real quick and see what's happening there. Right this instant, what's happening there is not a whole lot. Really, we kind of have this big triangle. Whoops, that was very sloppy right there. And then we have the smaller side of that triangle here. And so we kind of have this wedge that it's in. I actually like the way this is looking at the moment because in my analysis, this looks like the end of the weekly ABC correction, in which case this would be a daily wave 1 up, a wave 2 down, and we're heading potentially up for a wave 3 next. So if we take out that high, then that is confirmation that we do have the next wave to the upside. That's what I'm looking for. And so far, everything fits that. We have a nice textbook situation brewing here. On the oscillator, if I pull this up a little bit, we do have oscillator momentum getting higher to the downside, though. That I'm not wild about. I would prefer to see as this pulls down, maybe momentum getting a little divergent or something like that. But as long as it doesn't break this low, that's okay. We just need to see the market hold above that low, turn around and start to head higher. Right now on the shorter time frame, you can see how low the momentum has gotten. Instead of being kind of up at these levels, it is very, very tight, very low, very small momentum range right now in Bitcoin. And considering how crazy volatile Bitcoin can be, I mean, like, look at this big green candle right there, this monstrous candle. I mean, that was from about 9,400 to 10,400, 1,000-point move in 1 hour. That is crazy, but that's just another hour in the day for Bitcoin. So we've had a lot less of that lately. I mean, look how small these ranges have been, and the volatility has really contracted here in Bitcoin. And oftentimes that suggests kind of like a spring coiling up, ready to release. We've got a potential move building. So it's not happening yet, but it is looking good as long as this low is not broken. So keep an eye on that price action. And if you see things starting to give you clear signs to the upside, then be prepared if you want to trade this market to get long at that level, and just understand we need to not break that low there. That is our key line. All right, quick glance at the S&P again, just to make sure it's still there. Yep, still there. Nothing has really changed. Although, actually, interestingly, I will point this out. This hour candle that's about to finish in 10 minutes here came down and then shot back up again. We've got buyers aggressively buying up that market this morning, it looks like. And this whole push up here from yesterday, overnight and everything, has kind of just been a nice nonstop push up. So it is looking good. If we get a cross of the momentum crossing the zero line rather, on the 60-minute, then that could be what the daily needs to continue to the upside. It's been alternating here from light blue, dark blue, light blue, dark blue. It's been a real battle here between the bulls and the bears for momentum control. And right this instant anyway, the bulls have got control of the momentum, and it's looking like we're going to want to push higher today. And so maybe we get another break of the all-time high. We'll have to see, but we are right at that sell zone. So be very, very cautious of longs at this level. All right, that's it for this morning's analysis. Again, I'm Jonathan Van Kloot, and I will be doing this again on Monday. It is the end of the week now, so you have yourself a great weekend. Whatever you do, make it good. I hope your day trading today is a good one. If you're in the markets today, I hope you end it on a green note. I'll see you on Wednesday. Take care, everybody. Bye-bye.